Hello traders, welcome to your daily market update for Thursday the 30th of April 2015, and overnight we've seen the US dollar get dumped and we've seen a short squeeze on the euro. Basically what happened was the US dollar was in control of the entire market. Everyone was focused on that in all trading arenas, and it was dropped very heavily on the very disappointing Q1 GDP figures. We've seen a big disappointment in exports and capex, and the market reflected its disappointment in selling the US dollar way ahead of the FOMC minutes, and they become really a non-event because the market had already started pricing in the fact that we're not going to see a June hike and potentially a July hike, as the data continued to roll in weak, and the market just wasn't impressed and preempted what the FOMC minutes was going to say. And it was pretty much spot on. The FOMC minutes did acknowledge the weaker data, but they did say that it was transitory. And because they said it was transitory, everybody believes those words, and we've seen a little bit of a bounce in the US dollar towards the end of the session. Not a lot, but it was just enough to stop the bleeding. And I think right now, as I mentioned, the market has priced in that there is no chance of a June rate hike. And for that, I think that we're going to see a consolidation now in the US dollar moving forward towards the non-farm payroll. So I think that the US dollar bleeding has happened, and we've seen some big falls, but we could consolidate between these levels, especially between 94 and 96 on the dollar index, which we'll look at in a minute. We've seen a huge move, and the biggest gainer was from the euro. Excuse me, and that was from basically a short squeeze. All the stop loss orders from all the people that were extremely short the euro got taken out just above $1.10, and then the buying continued to accelerate as the US dollar fell and people's orders were getting stopped out, and there was a bit of scrambling in the market. So we've seen quite a big rally there, and I think that we're going to see some resistance moving forward after such a big move, based purely on markets stop loss orders, not due to anything fundamental or anything like that. The New Zealand crashed as the RBNZ basically acknowledged that if there is a drop in demand and inflation, that there will be potentially an interest rate cut. So the market really sold off on the back of that. It also noted that the high New Zealand dollar was affecting trade activity. That's quite interesting because exports doubled, and I think that that statement was more to do with some jawboning and trying to get the US dollar lower, and it certainly worked, especially with them discussing that there is a potential for a rate cut in the future. We do have some Canadian data out tonight, and we'll have a look at that. And let's jump over to the calendar here. We do have some information coming out into the European session. Everybody will be looking at the GDP figures here, but mainly the retail sales in the European session. Then everyone will be moving to the employment out of Germany. And then we'll be focusing our attention on the consumer price index. Later on in the session, we have a fair bit of US data as well. We're going to have some continuing jobless claims, which is important leading up to the non-farm payroll. We have some income, which the Fed is interested in personal income and wage growth. So people will be looking at those figures: initial jobless claims, consumer expenditure, and then we move to gross domestic product for Canada. And this will be watched by the market, and I think that we could see an upbeat there. I think it could improve that figure, but we'll wait and see. And if so, the Canadian dollar could take a bounce as well. So that's what we've got coming up with the data. There's a little bit there to watch, nothing major. I think the market will be licking its wounds a bit after last night and yesterday's session. So we'll move over to the charts and see what we've got coming up. Don't forget, we do have Labor Day on Friday. It's going to be a fairly quiet trading session, and there's not going to be a lot happening. We do have some ISM manufacturing kicking off and in the US session, but I think overall we're going to see a pretty subdued market conditions. Let's go over to the dollar index, and as you can see, I will move it to the daily chart. We'll really emphasize that the market sold off quite heavily. We've broken through the major support level, and I think now we're going to see a consolidation between the major levels here, and we'll be trading in this range here, especially until we get some further information on the US data, especially non-farm payrolls. We'll see what it has to offer, but for now we have formed a top and we are trading between the support and resistance levels that I've identified. Let's have a look at some charts, and you'll notice here on the New Zealand, big sell-off, big engulfing bear, candle formation. That really tops out the triple top pattern, 1, 2, and 3. So if we go to a 4-hourly chart, hopefully, it can show you a bit clearer. We've had 3 tests here of 77 and 0.4, so 77.5. We're now trading just above 76 cents, and I think we could continue to see some further falls here, especially after the market starting to get nervous about an interest rate cut. The Australian dollar has formed a big topping pattern as we really faded away and flamed out at the 80.5 cents. We're now trading back below 80 cents. I think that we will see a move lower, and this is a key reversal day that I've taught to my traders last night. So we'll be talking about that and trading that later on today, and I think that we will be seeing a pullback here and momentum on that one as well. The Great British Pound has had a big run up, but we're running up, and we're about to test some major resistance levels. And also I have here, as you can see, the 200-day moving average, which have really come up and tested. So I think we could run into some resistance here, especially after such a strong move. And then we could be potentially having a bit of a consolidation and a pullback before the market looks for its next moves. So keep an eye on that on the technical. I know the technical traders are definitely keeping an eye on the 200-day simple moving average. And it's a very similar story for the euro. Jump on the euro here, and you can see it's testing the 100-day simple moving average, and we did have a big run up. As soon as we broke above, I'll go to a 4-hourly chart for you. So we made a run through the through $1.10, and we got $1.10.5 breakout, and then we ran all the way through $1.12. We had a big run here as stop loss orders got taken out, and the short squeeze continued. And then since we've found resistance at $1.12, $1.10 will act as support, and $1.12 is the current resistance for now. Keep an eye on the daily technicals, as I mentioned, as I know technical charters are definitely keeping an eye on the 100-day moving average. The US dollar versus the Canadian dollar. US dollar falls continued to precede itself, except we did have a bit of a bounce in the late US session after the FOMC minutes, and it's reflected here by the small wick on the daily candle. I think that tonight's Canadian data will impact the pair. It'll be interesting to see where we go from here if we continue to make lower lows. I have been talking about the weekly chart and the fact that the market has come down and tested the 61.8 Fibonacci level, and I'm quite interested to see if we get support and bounce off that, or whether the market wants to make a run for the Fib 50 level in the long term. It's really indecisive right now, but I think that if the US dollar selling continues, the Fib 50 level looks quite nice. But in the short term, we could get a bounce. The US dollar versus the Japanese yen, still consolidating, nothing too exciting, and I think, as I mentioned at the start of the video, I think the US dollar is going to consolidate around these regions between the support and resistance bands, and I think that the US dollar is going to be uninspired as well. I wouldn't be looking for any major trends, and if you are trading it, I'll just be sticking to some tight scalping opportunities. Well, that's it from me today. I'll be back again tomorrow for a quick short video, but as I mentioned, it will be a quiet trading session. Until then, trade well.